Assalamu alaikum. Welcome to my YouTube channel. I hope you all are doing great. In this video, I will discuss about structured settlement annuities. What is a structured settlement? A structured settlement annuity allows a claimant to receive all a portion of a personal injury, wrongful death, or worker compensation settlement in the series of income tax-free periodic payments. Structured settlement may also be used in non-physical injury settlements so that your clients may receive tax-deferred income instead of receiving an immediate and fully taxable lump sum settlement payment. A sage settlement consult can advise you and your different structured settlement annuity options, which include fixed index annuities, single premium, immediate annuities, deferred income annuities, multiple year guarantee agreements. How does a structured settlement work? To the decision to utilize a structured settlement must be made before finalizing the settled agreement. Once both parties have agreed to the details of the structured settlement, the claimant releases the defendant from liability. The defendant or insurance then pays a structured settlement payout fund to the third party assignment company, which assumes liability and purchases an annuity from a structured settlement carrier. The carrier then makes a series of periodic payments based on a previously agreed upon timeline and amount. For more information about structured settlement annuity, contact us body. Structured settlement funding can be made with proceeds from settlement of almost any size. In fact, many structured settlement providers will structure amounts as low as $10,000. The choice ultimately the claimants and many find that a structured settlement is much more beneficial than a lump sum cash payment. Benefits of a structured settlement: 100% income tax free for physical injury and wonderful death cases. Payments including growth for physical injury and wonderful death case are free from state and federal income tax under section 104A of the Internal Revenue Code. 100% income tax deferred for non-physically injured cases. Payments including growth for non-physical injury cases are tax deferred. Guaranteed payment: the parties agree to the payment schedule at the beginning of the transaction that result in a steady source of safe, reliable income for the claimant. Guaranteed rate for return: structured settlement payments have a locked-in rate of return that protects injured claimants against market volatility. Non-overhead fees or expenses: structured settlement have overhead fees and professional tax treatment. This allows them to remain competitive with traditional investment. Market-based structured settlement: there are more investment options for aside from structured settlement in using the learn more, visit our market-based structured settlement page. Watch our video to learn more about diversifying your settlement funds. For more information about structured settlement annuities, contact us today. Recommend reading: is annuity income taxable? Are annuities insurance? Examining the financial strength of structured settlement annuity providers. How structured settlement can help divorcing spouses. Tax-free income with competitive returns. Why your client need to consider structured settlement. Don't follow these 6 structured settlements myths. Stay in the know. The pros and cons of structured settlement: balance financial. Avoid this costly mistake when settling a case. Social security disability insurance is eligibility impacted by a as economic landscape involve comprehending different financial agreements becomes increasingly essential. One such argument that often generates is the annuity structure settlement. Despite its relevance, many people struggle to the often leading to misunderstanding. In this article, we will demystify the concept of annuity structure settlement, answer question and divide into their implicate for your financial future. Table of contents: the basic: what is a structure settlement, the intersection: how does an annuity work in a structured settlement, unraveling the construction, is an annuity a structured settlement, ownership dynamic: who owns the annuity in a structured settlement agreement, locating your settlement: how do I find my structured settlement, operating: how does a structured settlement annuity work, next step: request a quote. The basic: what is a structured settlement? The structured settlement is a negotiated agreement where an injured party agrees to resolve a personal injury claim by receiving part or all of a settlement in the form of periodic payments. Instead of a lump sum payment, the claimant receives a steady income stream to meet future financial need. This payment approach offers a safer, more predictable alternative to a one-time payout. Example: consider Johan, who suffered severe injuries in a car accident caused by a distracted driver. After a lengthy legal process, Johan agreed to a structured settlement worth $2 million over 20 years. Instead of a one-time lump sum payment, Johan will receive an annual income of $1 lakh, helping him manage his ongoing medical and living expenses.